Buying a house is the biggest financial decision of your life. And the mortgage? It's the multi-$100,000 contract that decides your financial future for the next 30 years. For years, I sat on the other side of the desk as a banker. I saw people make small mistakes that cost them tens of thousands of dollars over the life of their loan. But what if I told you that the system has secrets? Things your loan officer might not tell you, but that could save you a fortune. My name is Adam Baker, and this is the Ex-Banker's Guide. Today, I'm unlocking the vault. Here are 5 mortgage secrets your banker won't tell you. Secret number 1, your interest rate is negotiable. The first thing you see on a loan offer is the interest rate. Most people think this number is set in stone. It's not. Your interest rate is almost always negotiable. Banks price their loans with a built-in margin. They have room to move, especially if you're a strong borrower. But they won't offer their best rate up front unless you ask for it. Here's the insider trick. Get pre-approved from at least 3 different lenders: a big bank, a local credit union, and an online mortgage broker. Once you have competing offers, take the best one and go back to your preferred lender. Simply say, "I'd love to work with you, but lender X is offering me this rate. Can you match or beat it?" I've seen this simple question save borrowers thousands. Remember, it's a negotiation. Treat it like one. Secret number 2, the origination fee is almost pure profit for the bank. When you get your loan estimate, you'll see a long list of fees. One of the biggest is often the loan origination fee. Your banker might tell you this is a standard processing fee. Here's the secret. A large portion of this fee is pure profit for the bank. While there are real costs involved in processing a loan, the origination fee, typically 0.5% to 1% of the loan amount, is highly negotiable. On a $400,000 loan, that's up to $4,000. The ex-banker's advice: directly question this fee. Ask, "Can you explain the breakdown of this origination fee? Is there any flexibility on this?" If they know you're shopping around, they'll often reduce or even waive it entirely to win your business. Don't be afraid to ask. Secret number 3, pre-approval is your superpower. Many home buyers start by looking at houses. That's a huge mistake. The real first step is getting pre-approved for a mortgage. A pre-approval isn't just a suggestion, it's your negotiation superpower. A pre-approval letter shows sellers and real estate agents that you are a serious, qualified buyer. In a competitive market, an offer from a pre-approved buyer is infinitely stronger than one without. But the real secret is that it gives you power over the bank. Once you're pre-approved, the bank has already invested time and resources in you. They see you as a likely customer and will work harder to keep you, making them more flexible on rates and fees. Get pre-approved before you even look at your first house. Secret number 4, you don't always need a 20% down payment. The 20% down payment rule is one of the biggest myths in real estate. As a banker, I saw countless qualified buyers delay their dreams for years, trying to save up this huge amount. The secret is, there are many loan programs that require far less. FHA loans require as little as 3.5% down. There are conventional loans for 3% or 5% down. Yes, if you put down less than 20%, you'll likely have to pay private mortgage, insurance, or PMI. But do the math. Sometimes, paying PMI for a few years while your home value appreciates is a much smarter financial move than waiting years to save 20% while house prices and interest rates climb. Ask your lender about low down payment options. Secret number 5. Bi-weekly payments can save you a fortune. Here's a final secret your bank will never advertise because it costs them money. It's called making bi-weekly payments. Instead of making 12 full mortgage payments a year, you make a half payment every 2 weeks. Because there are 52 weeks in a year, you'll end up making 26 half payments. That equals 13 full payments. This one extra payment per year has a massive impact. It goes directly towards your principal, dramatically reducing your loan balance and the total interest you pay. On a 30-year mortgage, this simple strategy can shave off 6 to 8 years from your loan and save you tens of thousands of dollars in interest. Most banks won't set this up automatically, but you can do it yourself. Just divide your monthly payment by 12 and add that extra amount to your principal each month. The mortgage process can seem intimidating, but knowledge is power. By understanding these 5 secrets, you're no longer just a customer, you're an informed negotiator. These are the kinds of insights we'll be sharing every week here at the Ex-Banker's Guide. My goal is to give you the insider knowledge you need to master your money and secure your future. If you found this guide helpful, click the like button and subscribe for more financial secrets. Simplified, and let me know in the comments. Which of these secrets surprised you the most?